Welcome to Factful Finance, where we turn complex financial concepts into actionable strategies. Today, we're diving deep into a hot topic that has the potential to change the way you build wealth, investing in AI startups and AI-driven stocks. We're going to break down exactly how you can capitalize on the massive opportunities in this space. Let me start by hitting you with a surprising state. According to a report by PwC, AI could contribute up to $15.7 trillion to the global economy by 2030. That's more than the GDP of China and India combined. So how can you tap into that growth and profit from AI? Let's explore. But first, a quick disclaimer. This content is for educational purposes only and is not financial advice. Mentions of any apps, products, or services are not endorsements. Always consult a certified financial professional for personalized guidance. All right, let's get started. When we talk about AI, we're not just talking about self-driving cars or voice assistants. AI is transforming nearly every sector, from healthcare and finance to logistics and entertainment. The startups and established companies that are at the forefront of this revolution are likely to see explosive growth in the coming years. But as with any investment, there's a level of risk involved. Here's how to navigate that landscape. Step 1. Understanding the AI market. The first thing you need to know is that AI is not a single entity, it's an entire ecosystem. So before diving into individual stocks, you need to get a solid understanding of the types of AI applications out there. Here are some key areas where AI is booming. Healthcare AI. Companies like Tempus are using AI to analyze genetic data and improve cancer treatments. This is a high-growth area with huge potential as precision medicine becomes more widespread. Autonomous vehicles. AI is at the core of self-driving cars, and companies like Waymo, owned by Alphabet, Google's parent company, are leading the way. The autonomous vehicle market is expected to grow at a compound annual growth rate of 40% over the next decade. Robotics and automation. Think about AI-driven robots in warehouses or even in your home. Companies like Boston Dynamics and UiPath are creating AI solutions that can automate complex tasks across industries, driving efficiency and lowering costs. Fintech and AI. AI is revolutionizing personal finance, investments, and banking. Robo-advisors like Betterment and Wealthfront use AI to optimize investment strategies, while companies like Square are incorporating AI into payment processing and small business services. Step 2. Identifying the right AI startups. Now that you understand the landscape, the next challenge is to identify which AI startups are worth your money. This is where the real legwork comes in. Here's what you need to consider when evaluating AI startups. Technology and innovation. Does the startup have a unique or proprietary AI technology? Are they addressing a growing or underserved market? Liam, a tech investor, was able to spot Cerebras Systems, a company specializing in AI hardware, before it hit the mainstream market. He saw the company's ability to accelerate AI training as a game changer, and it paid off. His early investment helped him see a 5x return in just 2 years. The team behind the startup is often the most important factor. Do they have a track record of success? For example, OpenAI, the parent company of ChatGPT, was founded by industry heavyweights like Elon Musk and Sam Altman. It's not just about the technology, it's about who's driving it forward. Funding and traction. Has the company raised sufficient capital from reputable investors? Check for backing from firms like Sequoia Capital or Andreessen Horowitz, which are known for backing successful tech companies. A good signal of a promising startup is a robust series of funding rounds that bring in investors with industry expertise. Step 3. Evaluating AI stocks. If startups feel too risky, you can look into established AI-driven stocks. Investing in companies that are already publicly traded allows you to capitalize on the AI wave while mitigating some of the risk. But not all AI-driven stocks are created equal. Here are a few key stocks worth considering. NVIDIA. Known for its GPUs, NVIDIA is the leader in AI hardware. It's the gold standard for any investor looking to get exposure to the growth of AI and machine learning. As AI applications continue to scale, the demand for NVIDIA's products will only increase. The stock has risen by over 1,000% in the past 5 years, Talk about exponential growth. The parent company of Google is heavily invested in AI, particularly through its subsidiary DeepMind. Alphabet has integrated AI into everything from search algorithms to autonomous vehicles and healthcare applications. Microsoft. Microsoft has made significant strides in AI, particularly with its Azure AI platform. Its partnership with OpenAI, the creators of GPT models, positions Microsoft as a major player in the future of AI. Tesla. Elon Musk's company may not be the first one that comes to mind when thinking of AI, but its development of autopilot and full self-driving features has made Tesla a leader in autonomous driving AI. Step 4. Building an AI investment strategy. Now that you have a clearer picture of where to invest, it's time to build a strategy. Here's how to approach it. Diversify across different sectors. Don't put all your eggs in one basket. While tech-focused companies like NVIDIA and Alphabet are great, don't forget to look at AI companies in healthcare or robotics. Diversification reduces your overall risk. Risk management. AI is still an emerging field, and while it offers immense upside potential, it also comes with volatility. Set a risk tolerance level. Some experts recommend limiting your tech investments to 20% of your portfolio, but you may choose more or less based on your financial goals. Long-term focus. AI's potential will take time to fully materialize. Don't expect to make a quick profit. Instead, focus on long-term gains. Amelia, a long-term investor, bought stock in NVIDIA years ago when its AI potential was just being realized. Today, she's looking at multiplied returns as AI continues to mature. Step 5. Stay informed and adapt. The AI market is evolving rapidly. What's hot today might not be the next big thing in 5 years. Stay updated with trends by following industry news, reading research papers, and keeping an eye on tech conferences. Be adaptable in your investment approach, and don't be afraid to adjust your strategy as new developments arise. So whether you're interested in AI startups or established AI stocks, there's plenty of room to profit. But the key is to understand the technology, evaluate potential risks, and build a diversified strategy that aligns with your goals. If you play it right, AI can be your ticket to significant financial growth. Which AI investment are you most excited about? Drop it in the comments below. I'd love to hear your thoughts. And if this video helped you think about your next investment step, don't forget to hit that like button and subscribe to Factful Finance for more insights into how you can take control of your financial future. If you found this content valuable, you'll want to check out our next video, where we'll dive into the future of renewable energy stocks. Trust me, you won't want to miss it. Thanks for watching, and remember, knowledge is power when it comes to building wealth.